NVIDIA Corporation was founded in 1993. NVIDIA is the world's leading manufacturer of AI hardware and software. Its professional GPU range is employed in workstations, in engineering, construction, scientific research, and much more. Along with producing GPUs, NVIDIA also offers an API called CUDA that enables the development of massively parallel programs that make use of the GPUs. The Tegra processor section integrates a full computer into a single chip and includes multi-core CPUs and GPUs to power supercomputing for consoles, entertainment devices, autonomous robots, drones, and vehicles. The share price of NVIDIA Corporation has increased 235% during the last 5 years. NVIDIA Corporation has a PE ratio of 86.64. NVIDIA's net income in 2022 was 9.75 billion, which is a 125.12% increase from 2021. This suggests that NVIDIA is a profitable investment. I purchased 184 shares of NVIDIA at $178.90. NVIDIA is now selling at 195.85, which is a 9.66% increase and a profit of $3,178.68 in about 5 days or so. Tesla was founded in 2003. Tesla creates, develops, produces completely electric vehicles. Electric vehicle design, research, and manufacturing are all in the automotive segment. The design, production, installation, sale, and leasing of stationary energy storage products, as well as the sale of electricity produced by solar energy systems to consumers, are all included in the energy generation and storage section. The share price of Tesla has increased 652.57% over the last 5 years. Tesla Inc. has a PE ratio of 48.18. Tesla's net income in 2022 was 12.56 billion, which is a 127.5% increase from 2021. I purchased 500 shares of Tesla at $134 a share. It is now selling at $172.89, a 29.03% increase on investment. My total gain on Tesla stock is $19,477.03 in only 5 days. Although the stock market is volatile, I intend to hold on to Tesla and NVIDIA long term. The reasons I purchased NVIDIA were because it has a good history of growth. I bought it at a fairly low price, and I also use the product every day, and I'm very pleased with it.
Hi there. The first stock that I chose to invest in is ExxonMobil Corporation. This stock is listed on the New York Stock Exchange as ticker symbol XOM. This was founded in 1999 and currently operates in the energy sector. This is the leading oil and gas company worldwide based on market cap. They currently operate at a size of 63,000 employees, have a price to earnings ratio of 9.27 and a beta of 1.05. The second company I decided to invest in is Applied Materials. They are listed on the NASDAQ with ticker symbol AMAT. They were founded in 1967 and operate in the technology sector, and they are the 10th best semiconductor producer by market cap. They currently operate at 30,000 employees with a price to earnings ratio of 14.59 and a beta of 1.51. As for my investment in ExxonMobil Corporation, the stock has increased by 52.2% over the past year. Wall Street analysts give XOM a recommendation rating of 2.2. The average analyst price target is $124. As for my investment, I purchased 888 shares at an average of $113.26. ZOM's current price is $113.56. So my investment on this stock is pretty moderate, as it only has a gain of 0.27% so far. As for my investment in Applied Materials stock has decreased about 19% in the previous year. Wall Street analysts give AMAT a recommendation rating of 2.1 and an average analyst price target of $120.53. As for my investment, I bought 200 shares at an average of $114.40, and AMAT's current price is at $108.20. So far the performance is pretty poor as we've lost 5% on our investment. However, I am seeing a 50 and 200 day EMA cross on our exponential moving averages here on our chart. So this is looking good for the future. Thank you.
My name is James Morgan, and I am currently a member of Group 6 for the Principles Investments. And these are my two investments in the Investopedia stock trading game. The first one is Alibaba Group Holding. This is the largest Chinese platform that provides e-commerce through its three domains: Taobao, Tmall, and Alibaba itself.com. not self.com, just iBabble.com. The reasoning was this is to mainly diversify our portfolio. After the talk of reaching the debt ceiling, I felt it was smart to possibly invest overseas in a different economy. As far as this stock goes, I don't know if that's the best option, as we'll see in the next slide. So far, the stock performance has been very poor. On Monday, the company had a talks about moving their headquarters to Singapore, and that day it fell around 7%. And the PE ratios, price to earnings ratios, are extremely high at the moment, and it is a heavily overpriced stock. I purchased it at 115 a share, and it has now fallen down to 111.50, leading to a total loss of $644. Not bad. I just invested in them, so I didn't lose too much as far as it all goes in the end. But the move with this stock is to definitely sell. My next stock I invested in was Lockheed Martin, LMT. They're a military contractor, mostly working with the United States, but are open to contracts as far as developing aerospace, arms, and defense. Reason I started looking into this corporation was Wall Street Journal posted an article saying how U.S. plans to move tanks into Ukraine, further inching us closer to being involved in the combat in the Russia-Ukrainian war. With us being close to combat, I believe the U.S. may be inclined to possibly send Lockheed Martin more contracts, more military contracts, that hence uplifting the stock to a higher price. Looking at the data, it has been pretty fair. The price to earnings ratio is 21.27. It's pretty an alarming stock. Pretty alarming stock PE ratio. It's not under or overvalued at the moment. Its earning per share is pretty strong at 21.66 a share. My portfolio earnings, as far as when I invested, it was at 448.01 and the current price sits at 461.2 cents. And my total earnings have been $1,300, an increase of 2.9%. The move with this stock is to hold it, I believe. Thank you. This has been my two stocks.
The stocks I decided to invest in are Apple and Lilly. Apple was founded in 1997. Apple Inc. is an American technology company. They design, manufacture, and sell electronics. Some of their products and services are the iPhone, Mac, AirPods, iPad, Apple TV, Apple Watch, Apple Care, and iCloud. They have 164,000 employees. Their one-year beta is of 1.2154, and their price to earning ratio is of 23.91. Apple generated over $365 billion in revenue for the year 2021, and in the year 2022, they generated over $394 billion. In the year 2022, they had a 7.79% increase in revenue. I purchased 700 shares at $142.87. The current price is at $143 with a 0.09% increase. The reason why I chose to invest in Apple is because I consider their stock a low risk investment, and their products are also very popular and a lot of people purchase their products. I also like their products, so that's why I decided to invest in their stock. The second company I decided to invest in is Eli Lilly and Company. Lilly was founded in 1876. Lilly researches, develops, manufactures, and sells pharmaceutical products. Some of their products are Prozac and Cymbalta, which treat clinical depression, Zyprexa, which is an antipsychotic drug, Trulicity, and Humalog, which treats diabetes. They have 35,000 employees. Their one-year beta is of 0.5759, and their price to earning ratio is of 51.3795. Lilly generated over $28 billion in revenue for the year 2021, and in 2022 they generated $29 billion. In 2022, they had a 5.34% increase in revenue. I purchased 190 shares at $349.98. The current stock price is at $340.50. $50, which means that the value decreased by 2.71%. The reason why I chose Lilly is because I wanted to keep our portfolio diverse. And so that's why I decided to go for a well known pharmaceutical company. And so that is why I decided to invest in Apple and Lilly.
My name is Paige Shackelford, and the stock I invested in was Vertex Pharmaceuticals Incorporated. Founded in 1989 in Boston, Massachusetts, Vertex is a biopharmaceutical company that specializes in drug development and gene editing therapies. This firm transformed how serious diseases, particularly cystic fibrosis, are treated by being one of the first to perform and popularize rational drug design, a technique in which researchers are more able to efficiently test and find quality medications in the drug development process. This company is a trailblazer in the biotechnical field with their advancements in disease and pain treatment. In fact, they are currently working to develop a pain relief alternative to opioids. This company's stock symbol is VRTX, and it operates within the healthcare industry. It has grown in size from 1,800 to just under 4,000 employees. It has a PE ratio of 23.47 and a beta of 0.44. I purchased 50 shares of this stock at $311.80. My decision to invest was based on the efficacy of the products produced by this company. Not only this, but this company's innovation separates it from other pharmaceutical companies in the market and could potentially result in revolutionary new medications. The consumers of these medications need them to survive, so the demand is high and consistent.
Hello, my name is William Harrison. I purchased two different stocks. Both of them are motor vehicle stocks. I invested around 100 shares in each, and the first stock I invested in was Ford. Around 100 shares into Ford. It's the largest American-made car company. It's a giant when it comes to car manufacturing, and especially the direction they're headed with the EVs, and especially the latest announcement of increased Mustang EV sales. I think they're headed in the right direction, as well as the other car companies. They have a high 1 year beta, meaning that they're a little more risky than other companies, such as Honda, my other company. But at the same time, I think that's mostly due in part to their high volume when compared to other competitors. There's no other car company that has quite the volume Ford does. Maybe Tesla, well, Tesla does, but the other like car companies, real car companies. Its PD ratio is a little low when compared to other companies, especially compared to Honda, which is around 8. But I think it's a great buy. Fairly undervalued, high volume, meaning that a lot of eyes are on it at all times. My second stock is Honda. It's another motor vehicle stock, second largest Japanese-made car company, right behind Toyota. It has a market cap that's very high when compared to other car companies, a little lower than, say, Ford, but still very high. The PE ratio is higher at around 8 than Ford, meaning that it's slightly less undervalued. But if you look at the beta around 0.56, you'll find out that it's a very safe bet. Worst comes to worst, you're not going to lose too much money. It's just a safe bet all around. You need safe bets in your portfolio. They've also recently hired new management in their EV sector, meaning they're headed the right direction in regards to EVs, and I think there's a lot of room for them to grow.